I got so much motherfucking design on right now.
Break it down, bring it back, make it clap. I got 3 old thoughts, new block, where that thing, bitches on my line, and you know.
Production. In this research, our group focused on analysing the financial ratio and projection for two prominent companies in the hospitality sector, namely Dutch Lady and Farmfresh. By delving into their annual reports for 2020 and 2021, we aim to assess their financial health and performance. This study enables us to understand the company trajectories, offering a basis for comparison within their industry. Background for Dutch Lady. Dutch Lady initially Pacific Milk Industry Malaysia Sedang Berhad since 1963, began with sweetened condensed milk production in Petaling Jaya. Expanding beyond the Netherlands, it evolved into a public company, listed on the stock exchange of Kuala Lumpur and Singapore. Over the years, it diversified its product range, introducing items like fruit juice under the Joy brand and sterilized milk in plastic bottle. The company transitioned from Dutch Lady to Dutch Lady, emphasizing a commitment to goodness for life and adopting the tagline "Get Ready for Life." Dutch Lady is a market leader in the group up milk segment. Ground for Farmfresh. Tuan E, formerly in the packaging industry, left his high-paying position in 2005 to start an agriculture business due to industry challenge and conflict of interest in the family-owned company. With a background in agriculture and some capital, we initially explored ventures like arowana fish and dragon fruit. However, recognizing the potential in the dairy industry, he transitioned to dairy farming, particularly goat's milk.
I start with the first analysis, which is liquidity ratio of Dutch Lady Mi Industri Berhad. Dutch Lady Mi Industri Berhad faced liquidity challenge in 2022 with a decline in current ratio from 1.57 to 1.11 and a reduction in liquid ratio from 1.04 to 0.58. The net working capital also decreased from 170,119 ringgit Malaysia to 50,038 ringgit Malaysia, indicating a narrower margin between current assets and liabilities, posing potential difficulties in covering short-term obligation. We move to the liquidity ratio of Farmfresh Berhad. Farmfresh Berhad's 2021 financial DP improved liquidity with a current ratio of 3.91 and enhanced ability to cover short-term liabilities, as indicated by a positive shift in quick ratio from 0.38 in 2021 to 2.80 in 2022. The net working capital also saw positive growth, going from negative in 2021 to a positive in 2022.
I want to present about trend analysis. My part is the activity ratios. The Dutch Lady Milk Industri Berhad activity ratios show a decrease in total asset turnover, a decrease in account receivable turnover, an increase in average collection period, a decrease in inventory turnover, and a decrease in fixed asset turnover. These figures suggest that the company's management is not effectively using its fixed asset to generate sales, indicating a need for improvement in their sales strategies. Secondly, the activity ratio for Farmfresh Berhad in 2021 and 2022 show higher total asset turnover, lower account receivable turnover, and a longer average collection period. Inventory turnover was higher in 2021 but decreased in 2022, indicating less effectiveness in generating sales. Fixed asset turnover increased from 1.90 in 2021 to 1.93 in 2022, indicating a lower effectiveness of the company's management in using fixed assets.
Today, we are compared to the financial performance of two leading dairy companies. One is Dutch Lady Milk Berhad and two Farmfresh, focusing on a key profitability ratios for 2001 and 2002. Starting, Dutch Lady faced a substantial drop in return on equity from 90% to 12%, indicating challenge in a shareholder return. In contrast, Farmfresh saw a more moderate decline from 40% to 13%. Farm Fresh also showed a positive shift in the return on asset, increasing from 5% to 8%, while Dutch Lady Milk return on asset fell from 13% to 5%. Now, turning our attention to both companies experienced challenge in maintaining profit margin. Dutch Lady Milk Berhad gross profit margin decreased by 8%, while Farm Fresh faced a more significant 19% drop within a year. The operating margin for Dutch Lady Milk Berhad dropped from 20% to 4%, indicating lower operation productivity. Farm Fresh exhibited a more moderate decline, moving from 90% to 15%. Moving on to the net profit margin, Dutch Lady Milk Berhad sharp decline of 90% from 22% to 3%, contrast with the Farm Fresh significant 9% increase, rising from 7% to 19%. In conclusion, the competitive analysis revealed distinct trends. Both companies grappled with the profitability challenge, but Farm Fresh showed positive shift, particularly in the return on asset and net profit margin. The dynamic nature of the dairy industry emphasizes the need for strategy, adaptation to increase overall profitability and shareholder returns.
Now I will continue to the next part, which is debt ratio. Debt ratio is a financial metric that compares a business total debt to total asset. For the Dutch Lady 2021, it's 45% lower than 2022. So in 2022, Dutch Lady more higher than 2021. Next, the debt to equity ratio in Dutch Lady 2021 83% and 2022 is 113%. It shows 2022 facing higher leverage than 2021. For the last time interest ratio in 2021, the Lady is 85% and 2022 is 154%. So 2020 is more time than 2021. Next, continue with Farm Fresh company in 2021 is 61% higher than Farm Fresh 2022, 40%. It shows in 2022 Farm Fresh more asset. Then I'm moving to equity ratio in 2021 Farm Fresh 158% compared to 2022 just 65%. So 21 is facing higher debt. Lastly, for interest ratio on Farm Fresh 2021 is 80% and 2022 just 77%. So it shows Farm Fresh 2021 is higher ratio and lower risk of default.
Now is a comparative analysis of Farm Fresh Berhad and Dutch Lady Milk Industry Berhad, focusing on their liquidity ratio in the year 2031. Farm Fresh Berhad faced liquidity challenge with a current ratio of 0.78, a negative net working capital. The quick ratio of 0.38 indicates potential difficulties in covering short-term liabilities without relying on inventory. In contrast, Dutch Lady Milk Industry Berhad demonstrate a stronger liquidity position in 2031 with a higher current ratio of 1.57 and a positive net working capital. The quick ratio of 1.04 reflects a better ability to cover short-term liabilities without heavily relying on inventory. Last from me, a comparative analysis for the year 2022. Farm Fresh Berhad have a solid liquidity position with a high current ratio, indicating a strong ability to cover short-term liabilities. Dutch Lady Milk Industry Berhad, while maintaining a healthy position, has a comparatively lower current ratio. Both companies show decreased quick ratio. Farm Fresh Berhad face a negative net working capital, suggesting challenging in meeting short-term obligation, while Dutch Lady Milk Industry Berhad maintain a positive net working capital.
Now, I'm presenting a comparative analysis also in my part activity ratio. In 2021, Dutch Lady Industry Berhad and Farm Fresh Berhad show different activity ratio. Dutch Lady had a higher total asset turnover, better account receivable turnover and average collection period. Farm Fresh had a higher average collection period and lower inventory turnover. Fixed asset turnover was also lower, possibly due to excess capital. Next, in 2022, Dutch Lady Industry Berhad and Farm Fresh Berhad show different activity ratio. Dutch Lady had a higher total asset turnover, better account receivable turnover, and average collection period. Farm Fresh had a higher average collection period and lower inventory turnover. Fixed asset turnover was also lower in both companies.
Farm Fresh continued its dominance in the net profit margin and at 90%, leaving Dutch Lady behind with a lower margin of 13%. While Dutch Lady demonstrates strength in the creating ratios in 2021, Farm Fresh emerged as the leader in the various profitability metrics in 2022, showcasing better return to shareholder, effect asset utilization, and supervisor cost and management.
We continue to debt ratio part. For the first, which is debt ratio for the Lady in 2021 is 45% and Farm Fresh 61% in 2021. So Farm Fresh higher debt than Dutch Lady. Next, moving to debt equity ratio for the Lady in 2021 is 33%, lower ratio compared to Farm Fresh 2021 is 158%. Then for term interest earn ratio in the Lady in 2021 shows 85%, higher than Farm Fresh, just 80%. The higher ratio indicate the Lady 2021 can meet loan requirement. The next is debt ratio for the Lady 2022 is 53%, higher debt than Farm Fresh 2022, just 40%. Then is debt to equity ratio on 2022, the Lady is 113% and Farm Fresh is 65%. In summary, the Lady more debt than Farm Fresh for this year. Lastly, the interest earn ratio in 2022 for the Lady is 154%, highest compared to Farm Fresh is 77%.
Overall analysis. In the overall analysis, both Dutch Lady and Farm Fresh were impacted by COVID-19, but Dutch Lady demonstrated greater stability during the pandemic. Farm Fresh higher inventory turnover suggested more effective sales, while Dutch Lady had a lower turnover, indicating slower movement of inventory. Conclusion. Dutch Lady, efficient cost management and higher current ratio suggest better debt repayment capability. Farm Fresh, with a higher operating profit margin in 2022, shows stronger productivity. Dutch Lady 12% return on equity surpasses Farm Fresh 6%, indicating a more favorable return to shareholders.